Welcome to Newspresso. Here is the top story in the past 6 hours. Last week, the tech universe took a sharp tumble. It wasn't just the usual market noise. Investors pulled back from the AI boom. The December rate cut hopes cooled. The longest government shutdown in US history just ended, adding a fresh layer of uncertainty. In the end, we saw a profit-taking spree. It was a shock from the shutdown. It was not a real shift in the AI story. I sat with Jeff Krumpelman, head of equities. I sat at Mariner Wealth Advisors to get his take. He told Yahoo Finance, "We're in a hold your ground camp." He explained that his team piled up AI stocks back in the 2022 slump when names like Nvidia were down 70% to 80%. Since then, they trimmed their positions just enough to keep them from ballooning. Early-stage AI adoption is still a powerful, multi-year theme, Krumpelman said. "This is real, we're early innings here, and it's not the dot-com cycle." Krumpelman also spotted opportunities beyond the mega-cap names. ServiceNow has slid 20% this year, and it's never been this cheap, he added. He pointed to software stocks lagging the AI boom. They are now attractive in cybersecurity. Alex Morris, CEO of Investments, said drop was simple. He described concentration of AI names in index. When a big portion falters, the average drops. It drops more than you expect. Morris blamed profit-taking and positioning. Ahead of next quarter's results, he blamed slide. Expectations are sky high, he said, and when a third of the index has a little sneeze, the rest catches a cold. And yet, earnings have proven to be the anchor, keeping the market from spiraling. Barclays strategist Venu Krishna highlighted, the S&P 500's Q3 earnings season has seen margins expand to record highs, with a 14.2% rise in net margins the highest in at least 20. FactSet data shows that 92% of companies reported, and 82% delivered a positive EP surprise. The earnings growth rate for Q3 sits at 13.1%, marking a fourth straight quarter of double-digit gains. Even the 11 sectors of the S&P 500 are reporting year-over-year earnings growth, and 76% of companies topped revenue expectations. All the big names are still delivering. The next big event on the radar is next week's Nvidia earnings. Analysts expect it to be the test that will show whether this recent wobble is merely a bump in the road or the beginning of something larger. The market is hanging on its breath, watching for the next data point that could either reassure investors to hold their ground or signal a deeper shift in the AI narrative. So stay tuned for next week's Nvidia earnings. It will reveal whether this wobble is a bump or the start of something bigger. Subscribe Newspresso. Never miss a major global headline.